Yana, what do you make of what just happened, how the market may react not only to what happened today, but really what could be 2 years of bickering and getting absolutely nothing done?
Well, it's another indication that it's complicated, but we knew that heading not just into this meeting, but over the last couple of months. Our job is not to kind of assess how everyone feels post this conversation, which obviously leaves you wanting more, but it certainly gives me a better understanding why utilities is second best performing sector to date. Our job every day is to find mispricing in the market where the sentiment is not reflective of fundamental opportunities we had in 2019. And we see a lot of value in the market and growthy areas of the market. We talked about technology in the beginning of the segment. Technology is actually trading at a discount to utilities and consumer staples while having top line and earnings growth in a subpar of that. And I just think we need to get back to fundamentals. There are a lot of opportunities outside of tech within industrials, aerospace, defense. You're talking about within consumer. There's so many incredible opportunities for long-term investors that can turn down the noise, perhaps mute some of that conversation while theatrical and certainly entertaining, and really think about what are we going to be talking about 3 to 6 months about, and do a proper assumption probability work that really takes into account what is the bull case, what is the base case, and the bear case assumption. And right now, to me, as I'm assessing the market, a lot of the weight is really assigned on the bear case assumption, where nothing can go right. And I understand the question mark assigned to the fiscal policy, but we have a lot of other things that can go right for this market. And perhaps we don't need much for the market to go right in order to see a lift in the sentiment that has been bruised year to date.
Mark Lasry has a question for you, Yana.
No, the only thing I was going to say, which is a little bit surprising, if you take a look at it, the equity market, the value is about $30 trillion. So the market now is down about 0.25%. So that would imply that's $75 billion worth of value that's just evaporated because of this fight. But just think about that. If we're fighting about $5 billion, we just lost $75 billion while the president and the speaker and the senator,
we don't make those kind of cost-benefit analyses.
No, that doesn't work.
No, that's too logical.
Okay, I just think the only people who are getting hurt here are, it's the American people who own stocks. Every time they're fighting, you're having literally $50 to $100 billion worth of value just keeps on evaporating.
Scott, I want to follow up on that.
I just want to say, what happened to gridlock is good.
Well, but I think there's a reassessment here of where the market is in the pecking order for President Trump. I think we started the Trump presidency thinking the market was in the first position. And I think we've seen at least 2 issues here, the trade issue and now the government shutdown issue, that the president is willing to sacrifice the stability the market craves in return for his political agenda.
Yes.
In both of those instances, and I think on a bunch of others, for example, fighting with Europe and fighting with Mexico and Canada, these are things, my attitude, having been overseas for 6 years and covering foreign policy of the United States, is you don't go looking for global trouble because it will find you. So I just want to say it's now a number 2, number 3 position here.
Yana Barton, I need a final thought from you before I have to let you go.
I've gotten, over the past couple of weeks, I've gotten more surveys trying to assess how I feel about the market and less about what I'm doing in the market today. And I think we're all feeling pretty punk. And you can just look at the market activity today. You can look at it since the beginning of October. And more importantly, what are investors and what should be they looking at going forward? And you need to be investing. You need to be stock picking. You need to do your homework and really assess where there is a mispricing between earnings, top line growth expectations, and the multiple you're paying for it. And right now, there are plenty of opportunities to really capitalize on that sort of dispersion of opportunity set. That's what I would say to investors watching the program today, which is think less about what happened in the last 5 minutes and think about what you're going to be thinking about in the next 3 to 6 months.